Hey guys, what's going on? It's George here from TradePro Academy. I had a little bit of an issue here launching the stream, but admittedly, this time was my fault. There's a little like spinny thingy here on the camera. I just got a new Logitech camera that like turns it on and off. And I'm like, why is the camera black? It's not working. Oh my gosh. Sheer panic. And then I realized it's actually me. Welcome to our morning market update. It is Thursday, October the 9th, all day long. And here is the news for today. All right. Euro stocks are up. Same with DAX, FTSE, and stocks as well. Stock 600 up like a minuscule amount, 0.1, 0.2, etc. Futures on the United States front are flat. ESNQ and RTY, which is Russell, and the Dow are pretty much unchanged for the session. All right. In terms of the FX markets, the dollar is up again. And I think it's up for a sixth day in a row, which kind of shows some safe haven flow persisting as money rotates into safety as stock markets consolidate at the top, and we're awaiting the Fed news that came out yesterday, which, by the way, is what we're going to go over today, along with our trading plan and what we have set up for the day. All right. In commodities in crypto, oil down 0.2%, gold flat, copper up 1.9%, and silver officially as of 8:26 in the morning surpasses $50 an ounce USD for the first time ever. So congratulations to silver. If you're not first place, you're second place, right? I guess with metals, you can't get the gold, you get the silver. But yeah, $50 an ounce is a big deal. So let's talk about the Fed meeting minutes yesterday. I don't want to go into too much detail on it. Although I have a really long note. Look at this thing. I don't know if you can see it, but it's a fairly long note, considering I don't want to go into too much detail about it, but it is important. Okay. And so these meeting minutes were for the last meeting, where the September's meeting, where they cut 25 basis points. All right. Fed members see more rate cuts ahead this year is the overall sentiment. We're going to continue the cutting. We're going to continue the dovish stance. All right. Only one person on the Fed wanted 50 basis points being cut, so 2 cuts at a time. But the majority were at 25 basis points, and there were no dissenters to not cut rates, right? So everyone's on the same side. So all you're kind of looking at this so far is, all right, the Fed's kind of moving in unison, kind of unanimous decision. One guy wanted to cut more. It's not a bad thing. All right. Several of them, though, warned that the policy might not be very restrictive anymore, meaning the Fed kind of sees limited room left to cut before it starts risking inflation. Right? That's their perception of it. So kind of the overall tone of this meeting was very Fed-like. The Fed is very good at saying everything, but then defending it and saying nothing at the same time. So the net effect is, all right, well, I'm kind of confused. And I honestly, don't tell anyone, I think they're slightly confused too at the Federal Reserve. I'm going to just call it like it is. All right. With that being said, they on the view on inflation, they said tariffs are adding modest upward pressure on prices. Like I think 25 to 0.5% of inflation is what the calculation by economists is on the impact of tariffs to inflation. Which, all right, man, I'm gonna try. That's a pretty tall order to work down the video. Which 0.5% inflation is not bad considering what's going on and the amount of revenue that these tariffs are bringing in, right? So it's not like it's a massive impact. But also productivity gains are helping offset inflation. Businesses are still raising prices due to higher input costs, right? This is what kind of keeps the Fed more cautious on their tone. This is inflation stickiness and wondering if it's going to be there and be around. Now, I can't stop thinking about that. I just got a funny text and a funny suggestion, which I obviously can't. All right, on the balance sheet front from the Federal Reserve, they said that quantitative tightening is running smoothly. Reserves are still ample on their balance sheet. Fed to keep watching liquidity as these reserves decline and they continue to bleed them off of their balance sheets. And they said the balance sheet won't stop the Fed from easing policy further if needed. So all in all, here's their interpretation here for the market. So it's dovish. This dovish tilt in the future is confirmed, but we already knew that. More cuts likely coming in the months ahead for the Federal Reserve. All right, yields should drift lower near term, and dollar strength may take a little bit of a pause on this news. Dollar was strong going into it. Now it could take a little bit of a breather. All right. Equities could get some relief from a softer policy tone, meaning we could have some upside there. But the message is gradual easing, not a hard pivot here, which is what the market had hoped for. All right. So there you have it. It's a cautious stance with support for further easing, for support for further rate cuts, but not all out like dovish, and they're willing to throw the kitchen sink at it. All right. So that's that on the Fed front. I was going to do a piece about the AI bubble. It's not a bubble. I'm going to get some flack for saying that, but I was going to do a piece that said the AI debt in the industry of AI, it has become more leveraged, more debt in total than the entire banking sector. So we think about banks being able to bring down the economy kind of like 08, 09, right? Because that's our latest kind of reference in our head for a big sell-off in the markets. It was almost down 50% at the time. But then you look at AI, and AI actually has more debt and more leverage in the banking sector. It has surpassed it. I was going to give a cautionary tone on that. I'm going to save it for tomorrow because I didn't realize my camera turns off when I do this. So I was panicking for 3.5 minutes, so I started late. All right, next thing and the last thing I want to cover in today's session, because I do have to go jump in the room with Victorio Fadi and our oil desk manager as well, Boxy. So I got to make this a little bit quicker is what I'm saying, but I got a lot to go through. All right, so market outlook, and here's my trading plan. This is remember, I trade ES futures predominantly and mostly, and sometimes I'll do oil, but not recently. All right. Overnight high in the ES is 68.12 quarter. Okay. And when you compare that to the prior day high, which is what I like doing, of 68.07 3 quarter, it's up, but not by much. So the overnight session has extended the gains where we left off in yesterday's US session, but it hasn't really pushed higher too much. Right. It's a small movement, which is actually great because it leaves some fuel in the tank for our US session today to trade it upward if we have an expansion and breaks through resistance. All right. Overnight lows was at 67.94 half, all right, which is way up from the prior day low of 67.64 half. So that's good. You want the overnight low to be pushing up. So all this is really saying is the last day was a downward move and we closed near the lows. Yesterday was an upward move and we closed near the highs and we consolidated those highs overnight. So in a way to look at that is there's some price acceptance, which I think we could push to the upside to see if there's some liquidity there. All right, so we ran up 28.25 points in the U.S. session yesterday. We reached near the highs, and then we're consolidating that run overnight. That's where we're at. There's some pretty big call activity near 6,800, and this is by far the largest volume cluster in the next three most immediate expiries. All right, and this kind of defines our near-term. Oh, wait, my bad. This shows the strong resistance. Market makers likely short calls there, and then will short the S&P 500 to defend their position. All right, but we're around there now, and I think at a certain point we're ready for the move higher. So today's tone overall is going to be bullish, but moderately bullish. I'm prepared to trade both the range and the upside expansion. And if you do trade the range, which means you're short, if you break a new high and you see a lot of accumulated longs that aren't getting paid, it's time to short. You can't break the new high and we're getting longs accumulated, it's also time to short. So if you're short for the range play to the downside support, you might actually get a big follow through for the day as well. But those are the two things. It's either going to break above or it's not. And we're prepared to trade both of those as our trading plan. I see a tendency here for the market to want to try to pop that top and see what we got to the upside. See how many buy stops we have accumulated there over multiple day rotations at highs. All right. There's a put wall as well at 67.50 and some at 6,700 to 6,725. That's far, far away. All right. That's kind of the downside support. We're far from it, but that's where a lot of the options activity is, and it hasn't shifted over the last couple of days. So here's my outlook and trading implications for the day, and then we're going to wrap this up. Is short term, I expect range value trade between 6,750 to 6,800. Now we're close to the top end of that at the moment. There's a lot of options gamma decays that's going to happen post Friday. So I think until Friday, that range is kind of the set point, and Friday's tomorrow. So we have 2 days. All right, decisive move above 68.10 would kind of spark short covering towards 68.50 plus. So we have an upward expansion. That's where I think it's going to happen, 68.10 upwards. All right, and break below 67.40 flips gamma negative, but that's so far away that you're going to get that short off the range trade first before you look for that short below the 50. All right, with Fed minutes now digested and macro tone cautious, neutral to slightly bullish bias for me today remains above that 67.50. And let's see what we get. All right, one thing I'll tell you is because we're pressed up against a high, because the Fed is behind us now, market does seem ready to move bullish, to test the bullish side. But be careful because that doesn't mean it's going to happen as soon as the opening bell comes. In fact, more often than not, when you're opening close to highs and you're pressed up against a high overnight, you're going to have to slice down, let go of some longs. All right, shake out the people on the ship. The boat is too full on one side. It's crowded, so people fall overboard. And now we have the rocket fuel to pump higher and push through resistance. All right, that's the read. Slightly neutral, but slightly bullish. And if we do break, I have no problem getting on board. If not, I'm going to trade the range, which could spill to the downward move today. Whew, that's that. It's only my second one in a couple of years. I'm starting to get back to it. It feels good. Thank you guys supporting. If you do like it, hit the like button. If you loved it, share it with somebody. Put a comment in there. I thrive on interaction. Post something and I'll reply. I reply to all of it myself personally. Thank you guys for tuning in. We're live every morning at 9 a.m. before we open our trading room. So hopefully you enjoyed this. Take care and have yourself a great day. And I get to use a spinning thing. I was thinking about this the whole time. This is how I'm going to end it.